Oh, gotta turn the camera around. Hey folks, welcome to today's The Steady Trader YouTube Live. Let's talk about Facebook. I've just gotten off a long flight and I landed, I think I had like 20, maybe 25 messages from clients and just generally people asking about Facebook as an update. Facebook's at a critical juncture, both technically and sort of from a news flow perspective. Long story short, I don't think you have to dump every single penny you own. And by the way, this is not a recommendation or advice. This is simply my opinion. I do think there's still long-term growth. Remember, Facebook is not just Facebook, but I'm going to give you guys a little bit of perspective. So let's flip around and get right to the charts so you guys can see what all of this looks like here. All right, so first of all, let's keep everything in perspective. This is the longer-term chart, and when I say longer-term for Facebook, looking back to its IPO back in 2012. If we draw some very simple lines here, you can see two things. Well, first of all, before we draw any lines, we're at the 100-week moving average, okay? One of the big things I can tell you is to use simple moving averages because they tend to, simple like moving averages that a lot of people use, like the 50-week, which is yellow, the 100-week moving average, which is in blue, and the 200-week moving average. Again, these are just reference points. Let me turn the camera around. This is important. Okay. These are just reference points. This is really, really important. When you use moving averages, they're not like hard places where you set a stop or get out of stocks. These are just reference points where you then do a deeper analysis and kind of take sort of a decision based upon that. So let's flip this camera back around if I can. Here we are. All right. So that's where we are right now. We're basically right at the 100-week moving average. And you can see that the last time we bounced off of this moving average was back here in 2015. Now, this right now also lines up with a very simple lower end of the longer term channel. So if I just draw the simple lines, connect the dots, okay? It's like a regression line. So you want to connect as many dots as possible. It's not an exact science. It's really more an art. I'm going to duplicate this, just make it parallel, and move it up here, all right? And now what you see is after having the overshooting move up here, we are now finally moving back to the lower end of the range. So from a pure trading perspective, there might be a trade to be had to buy this stock, and we'll look at this more in the daily chart in just a second. If you're an options trader, and this is one thing that we do a lot for clients, is sell out of the money put spreads. You got to do it the right way, though. If you don't do it the right way, you're going to lose money. But let's have a look at the weekly candle a bit more. So first of all, the week's not yet over. Let's just be very clear. It is now Tuesday. We have 2 more days. It's a holiday shortened week. But so far, we had a rejection. The bears basically ran out of energy, and they are now looking to push higher. So the question now is, of course, can we see follow through? So let's go to the daily chart, and let's see what that looks like on the daily chart. On the daily chart, you can see here too. Obviously, we went to the lower end of the range. And now, and we're very oversold, by the way, from a momentum perspective down here. This is a MACD moving average convergence. But what we're seeing for the first time in some time, we haven't seen this in a while, is we're seeing some of these moving averages, and especially the 50-day, barely cross below the 100-day. So to me, my general rule for this kind of thing, just purely from a technical perspective, when we tend to see overshooting on a stock to this extent that we saw up here, okay, this stock overshot its longer-term trend for like, what, 8 or 9 months. Ultimately, we tend to see an undershooting move to the downside. So I would not be surprised if ultimately this stock goes at least towards 150, maybe more towards 140 or lower. Okay, that's my base case for the bigger picture. But looking at it on the daily chart, I think we could indeed set up for a bounce play. Just some, people getting very frustrated with the short side or taking profits on the short side. And then balance. And then the reason why we would start falling, running out of steam again up here would be because the people who bought up here, anyone that's bought up here, anywhere from the summer of 2017 all the way up into really, let's call it mid-March of this year, mid this month, they're going to want to get out as soon as they get back to some sort of break-even point. So that's basically this area up here. Okay, that's kind of this area. All right, so any bounce from here, I would think is going to see a lot of selling pressure. So I think one could try buying the stock here for a bounce. Again, I would do this in small size. It's just a trade, but I think more importantly, we're probably going to run out of steam at some point up there. So I hope this is helpful, folks. Give us a thumbs up, like. Spread the news of our YouTube daily live video if you enjoyed this. If you didn't, don't. But I wish you guys a great day. If you have any questions, please let us know or leave a comment down below. See you in the next video.